Hey guys, how's it going? Solo back here with another Sunday trade idea video for this upcoming trading week. And I have some ideas because I might look into playing some other stocks that I have never played before or have not played that frequently. And I'll let you know why. But just to recap, let's just see how we ended Friday. So if you remember from my video from Friday night, big tech was up big. I mean, Amazon, Facebook, Apple. Of course, Apple announced that 4-to-1 stock split that's going to happen. But otherwise, aside from big tech stock, there is a decent amount of red on the board. The semis were down, AMD was down 1%, Micron down 1.4%, Nvidia was pretty much flat at 0.01% up. Qualcomm actually came back down to earth at 1.5%. So aside from the big tech stocks, it was kind of a lackluster day, maybe even a little bit of a red day, depending on what tickers you were playing. So I was looking at this, and I was fortunate enough to have some puts on Virgin Galactic and Space that expired worthless last Friday. So I was able to collect max profit on those. And I was thinking, I have no open positions right now, meaning I'm all cash. So what tickers do I want to play for this upcoming trading week? And of course, the first thing I was looking at was AMD. But AMD just seems way overvalued right now. I mean, just to give you an example, when I opened my puts about a week and a half ago, they were at the $51 and $61 strike prices. AMD is now at $77.43. So in order for me to open up an option on AMD that would be, in my opinion, somewhat worthwhile, it would have to be in the low to mid 70s. I mean, let's just take a look at the options chain. Granted, again, this is not going to be accurate because it's going to change when the market opens tomorrow. But if we just take a look, let's just look at the $70 strike price. I would collect roughly $25 in premium when the market opens Monday. So let's just do $25 divided by 7,000. I mean, that's just under a 0.4% return on my risk. So if I want to play a put on AMD and stay safe at, let's say, 0.4%, I'm going to be looking at the $71 strike price. And although there is a good amount of buffer between $77 and $71, if AMD does decide to pull back this week, or we have an overall general market pullback, I don't think I want to own shares of AMD at 71. I think that's a little bit too high right now for the price, considering that the stock was just trading at mid 50s to mid to low 60s, a week and a half ago, 2 weeks ago. So the 70s, I really don't want to own AMD in the 70s. So if everything stands the way it is now, unless we open up deep red on Monday and AMD is like low 70s, and that way I can maybe get in the high 60s as far as a cash or good put, I will probably not make a play on AMD this week. So then the question is, well, what do I want to play? So then I went and looked at Space or Virgin Galactic, because usually the premiums on Space are always juicy just because it's more of a volatile stock. And fortunately for me, it did have a decent pullback for the past few days. I mean, between July 28th to the July 31st, Space bled off those days. So that's good for me because one, my strikes were at $20.50 and $21. So my strikes weren't tested. So I was able to collect max profit on my options that I sold. But now I can also open up newer options at an even lower strike price, because when I opened those puts, I think Space was trading in the mid 20s. So now that it's down to 22, I can probably open up some puts on Space in the high teens, mid to high teens, and collect a good amount of return on risk. Let's just take a look. So right now, let's say we open up flat Monday morning at around $22. And if I want to get in at the high teens, let's say I'm looking at the $18 strike here, for example, then I could probably, let's see, $16 in premium divided by $1,800 in collateral is going to be a 0.9% return on my risk. So that's not too bad. I mean, that does give me a $4 buffer. And I think if I do get up ending assigned shares of Space, $18 is not a horrible price, in my opinion, to get assigned shares of Virgin Galactic, especially if you think that we're going to rebound after a couple of red days in a row. So the other thing to keep in mind is that Space has its earnings this week as well. So if we take a look, Space's earnings are actually on August 3rd. So basically tomorrow, Space has its earnings session. So if we take a look, Space's earnings are going to be actually after hours tomorrow, after the trading day. So that means that tomorrow morning would hopefully be an ideal time to sell a cash you could put on Space, because volatility is going to be high. And then just like we talked about in the prior videos from last week, I can use IV crush or implied volatility crush to my advantage. And then hopefully when we open up Tuesday, that my premiums will have been way more profitable, because the volatility of Virgin Galactic would have gone down some, because now earnings had already happened. The other thing that I'm looking at is, I had the DMI indicator down here for a few weeks or so, and I just wanted to feel it out, test it out, see what I thought about it, and I found myself not really using it to trade. I didn't really like it. I still like the RSI. I mean, that's been my personal favorite indicator so far. I think it's served me well in terms of when to open up puts. But the squeeze metrics, or the squeeze indicator, is a somewhat similar indicator to RSI in that it essentially measures volatility and momentum. So I may make a video on how to use this later on, but the gist of it is, if these bars are above the baseline, that means momentum is bullish, it's towards the upside. If the bars are red or below the baseline, that means the momentum is bearish. And obviously if the bars are increasing, that means the momentum is increasing in that direction. Then once the bars start going back to baseline, that means that momentum is fading essentially. So what's interesting right now is that Space, you can see it's got a bearish momentum or bearish volatility based on the squeeze metrics. And now, we don't know, is tomorrow's bar going to be even bigger? Meaning, is there still more negative or more bearish momentum? Or was this the peak and are we going to start going back to baseline? Right? You can't predict the future. But it shows that right now, and I mean the graph kind of represents that we're in a bearish trend for Space. So I don't know, it depends on how you want to look at that, because if we're in a bearish trend, then that tells me that maybe I want to sell a put that's a little bit further out of the money in case this is not the peak momentum in the negative direction. But as you can see, RSI is not really oversold, but it's also not really near the baseline. It's kind of in the middle there. But you can see there's a correlation between RSI and this momentum indicator. You can see there's points where the RSI touches the oversold category and the momentum is in the negative direction there. So I'm going to just check this out and just peek at it when I open my trades for the next few days and weeks to see how I like it. But I just like testing out new indicators, discovering new things and new technical analyses, and just overall learning new things. But I know some people use this squeeze metrics or squeeze to figure out their plays. So I'll report back, see how I like it or not. I've also been messing around with this Ichimoku clouds, but honestly, I haven't really used them to trade. I also have not found them very helpful. But again, that's just my personal opinion. Maybe I'm not using them properly, but so far, like I said, I've enjoyed trading based off the RSI. I think that's served me well so far. And not only that, but it's also a relatively easy indicator to analyze. So just a little quick aside on that. But if we look at the squeeze metrics on AMD, you can see it had a negative momentum, but it looks like it's going back towards the upside. So we may be going more towards a bullish momentum. So again, I mean, that might indicate that if you were to open up a put on AMD, that if the momentum is now going to the upside, that might suggest that AMD stock is going to rise, so your puts might be more secure. Again, no technical analysis is 100% accurate. I'm just kind of relaying information that I've come across and that I find interesting. But so I still don't think I'm going to open up a play on AMD. I might open up a position or two on Space just because the premiums are looking good. I can hopefully take advantage of IV Crush because it has earnings tomorrow. And like I said, it's been in a negative downtrend, so maybe I can open up some puts at a decent strike. Like I said, maybe at the $18 value and collect decent premium. I mean, if I wanted to be super safe, I could probably get in on Space at like maybe 15 if I really wanted to play it super safe and get 0.4% return on my risk. Let's just see what the $15 strike is at $4 in premium. So 4 divided by 1500 is actually, it's only about 0.3. I probably have to get in at maybe 17. Let's see, 6 divided by 1700 is just a little under 0.4%. Yes, probably 17. 18 is not bad because the gap of premiums from 17 to 18 is $10 for only a $1 difference in the strike price. So that's interesting. So maybe the $18 strike is looking good, or somewhere around there in the mid to high teens, depending on how risky or risk averse I feel tomorrow morning. But space is looking a little interesting right now to me in terms of opening up some puts. And the other nice thing about space is that the stock price is so low that each contract, it requires such little capital. I mean, for an $18 strike, for example, I would only have to put up or have $1,800 in collateral. So if I wanted to, I could open up multiple contracts or just have 1 or 2 contracts just to dabble in Virgin Galactic if I wanted to. Now, the other stock that I kind of hinted at the beginning of this video that I was looking at making a play on was Activision Blizzard. And if you're not familiar with them, they are a video game company similar to EA Games. And I'm looking at this stock for a couple reasons. One, because EA Games had their earnings recently and their earnings were very good. So they're another video game company. And right now a lot of people are staying home, a lot of people are playing video games because they have nothing else to do or they're bored at home. And so you would imagine that the video game company's revenue is increasing. And I think EA earnings somewhat supported that hypothesis because they had good earnings session. And the other thing, if you look at the long-term graph on Activision Blizzard, I mean, this is the 1-year graph. If I just showed you this graph and you were living under a rock, you probably wouldn't even be able to tell that there's kind of a big issue going on in the world right now. I mean, yes, this is the drop from earlier this year. You can see it went from about $64 and change to a low of about $52. It only dropped about $12 a share. And then it set all-time highs. I mean, it hit all-time highs back in April, right? And just keeps going up now. I mean, right now we're at $82. We're up roughly $30 from where it was back in February. So that's kind of crazy. I'm surprised this stock hasn't been on my radar recently, but I know why. Because I know when I search for options trades, I filter a lot of them out based on options volume. And the one thing that goes against opening up a position for me on Activision is that it doesn't have good volume. I mean, if you look at its premiums right now, they're juicy because they have earnings coming up this week. And if we just take a look at the at-the-money put at $82, you would collect $308 in premium. The 308 divided by 8,200, so that's a 3.8% return on your risk, which is very good for an at-the-money put. But if you look at some of these numbers, they don't really make sense, right? Because the at-the-money put is 308, but then why is this strike that's $1.50 less have a higher premium value? So when you ever see that, it's usually because the option has low volume, meaning it's just not a popular stock or at least a popular option that's being traded a lot. And that's usually the result of a wide bid-ask spread. So if I look at this option, you can see the at-the-money option, there's a volume of 1,800 with an open interest of 133. That's not a lot. I mean, if we take a look at AMD in comparison, so just remember those numbers, 1,800 volume and 133 open interest. So if I look at the option chain for AMD, for example, which is one of the most popular stocks actually, if I look at the at-the-money put, the volume is 5,000, the open interest is 1,600 basically. So you can see it's much more of a popular stock, and this is much more of a popular option than Activision is. So what that tells you is you may have a harder time getting filled at a good price. You can see the volume of AMD was almost 4 to 5 times that of Activision. So, and that's on the buying a call side. If you look on the put side, let's just say about 3 times the volume and almost 10 times the open interest, right? So that's the thing. I mean, if we take a look at this volume and open interest, and then we looked at this strike that the premium doesn't make sense based on this strike, you can see This is why. The volume is about a tenth of this. It's only 106, and the open interest is only 224. Now, a part of that reason is going to be because it's like a 50-cent strike here, because usually people like to trade options in whole numbers. So 82, 81, 80, 79, 78. Usually these kind of half strikes where it's 78.50, 79.50, 80.50, they in general usually have lower volume than the full dollar strike values. I'm not saying that's necessarily a bad thing. I'm not saying that you shouldn't trade. I'm just making an observation that in general they have lower volume. So again, lower volume and lower open interest will mean that you might have a harder time getting filled or getting filled quickly, and or you may have a harder time collecting the premium that you want. So if we just take a look, for example, the bid-ask spread, even at the money put, is decently wide, right? It's about 25 cents wide between 295 and 320. That's a 25-cent difference here. If we take a look for comparison again at AMD, for the difference in the bid-ask spread for the at-the-money put, you can see it's actually a less than 10-cent difference. It's actually just a 7-cent difference from 185 to 192. So in general, you want a higher volume, higher open interest, and that will lead to a higher bid-ask spread. So that means that you have basically a tighter range of premiums between your buyers and sellers. So it will probably be possible to get filled on an Activision trade, but you're going to have to play with the premiums that you want to collect, I suspect. So let's just see. If I want to make a play on Activision, let's just say, for example, I'm looking at, because it's trading at 82, being this would be my first trade on Activision Blizzard. Let's say I want to play it extra safe because I don't really know a lot about how the stock behaves. So let's just say I want to go all the way down to, let's just say 75, because I want to play it extra safe since it's my first time. So the 75 strike price option has $80 in premium. Let's just take a quick look at the volume and open interest. So it's not great, right? Volume is only 84, open interest is only 382. But let's just say I'm able to get filled at 80 cents. And you can see it's got a very wide bid-ask spread, right? The bid-ask spread is 93 cents minus 67 cents. So it's actually 26 cents wide. So what that means is that when you're submitting your order, if you choose to sell this option, you can essentially pick a value between 67 cents and 93 cents. Now, obviously, if you want to get filled at 67 cents, you're probably going to get filled immediately, right? Robinhood always presents the mid price. So you can see the mark price is what Robinhood shows. So they always show you the midpoint between the bid and the ask by default. So you can take that to mean that if you're looking to buy this option, the sellers are willing to sell it to you for 93 cents. If you want to sell the option, the buyers are willing to buy it from you for 67 cents. So you could say, to meet in the middle so both sides are happy, let's agree on the mid price. So if you do put in your order at the mid price, because the volume and open interest is so low, you may get filled immediately. Maybe it'll take a few minutes, maybe it'll take a few hours. I don't know. It all depends on if there's someone else on the other side of the transaction that's willing to accept that price. But you may have to do what's called price discovery. And let's say you put in your order for 80 cents, maybe 10 minutes goes by and nobody's biting. Maybe you have to reduce that down to 79 cents. Check again for a few minutes, nobody's biting. Go to 78. And you just maybe won't have to keep going down penny by penny or every 5 cents, depending on how quickly you want to get filled, until somebody bites at your price. So that's why with a bid-ask spread, you may have to play around with the numbers a little bit. And like I said, you may look at this option and say, oh look, it's $80 in premium on a collateral of $7,500. So that means that I would collect a 1.1% return on my risk if I can get filled at $80. But like I said, you might not be able to, and maybe you'll have to price discover down all the way to $70. Well, then your return on risk is going to change by a significant amount, right? Because now it's only $70 divided by 7,500. And now your return on risk is only 0.9%. So you just lost 0.2% of return on risk by having to do a little bit of price discovery, which I'm not saying is the bad thing, but it's going to require a little bit of effort, right? Because you might have to watch this option for a little bit to watch it work and know that if it doesn't get filled in 5, 10, 15, 20 minutes, however long you wait, you're going to have to adjust these numbers. It's not an option like AMD or Virgin Galactic, where pretty much whatever the value you put in, the volume is so high that you're probably going to get filled nearly instantaneously at that price. So that's just the one thing with Robinhood to watch out for, is that they always select the mid price for you. But in theory, if you think you can get someone to bite, you could bump this up to 85 or maybe even 90 cents, so you can collect even more premium. Now, obviously, if you go in the higher direction, it's going to be even harder to get a fill, but it's not impossible, right? It just all depends on how much time you're willing to wait and what your minimum premium you're willing to accept is. For example, if I put in this order and I say to myself, you know what, this is the bare minimum premium I want, I'm not willing to go down even to $79. You just have to know going into it that if you put in that order at 80 and you're not willing to go even 1 penny down, you may never get filled. It's not a guarantee. So those are my options for this coming trading week that I'm looking at. We just want to take a look at the graph on Activision. So this was actually pretty difficult for me in terms of where do I draw these Fibonacci levels. Because if I draw it from earlier in the year, from February to the low in March, it's already broken through the 100% Fibonacci level. And that was, all the way back here in May. So, we're trading right now between the 162% and 200% Fibonacci level in this big dark red area. So, you may be able to, and you probably should, draw a new set of Fibonacci levels somewhere here in this later end of the curve. But I am by no means an expert on Fibonacci retracements. And honestly, again, I wouldn't know where I should draw these lines. So I'm kind of flying by the seat of my pants here in terms of Activision. It's a lot of strange things with this stock, between the options volume, what the stock price has done over the past, few months now. The one decent thing though, is if you look at the squeeze metrics, you can see that there was bullish sentiment that's kind of fading away now. So maybe we're going to turn into a little bit of a bearish momentum. I don't know. But I do know that earnings are coming up this week on August 4th, so on Tuesday. So in a similar vein, I should be able to play IV Crush on Activision Blizzard. And then as long as I'm far enough out of the money, if I am concerned, maybe I'll just close out my position after earnings on Wednesday. But those are the stocks I'm looking at. One third one I had my eye on was Disney. You can see they also have earnings this week. So if I really want to play earnings like hard this week, I could do Activision Blizzard, Disney, and Space, and just be like Vega Gang and just play IV Crush. But you can see Disney actually on Friday actually rose a lot. It was hovering around 114s on Friday in the morning, ended up closing at close to 117. And as you can see on the RSI curve, it's nearing towards overbought category. Even the squeeze momentum indicator, the bars are increasing, meaning there's bullish momentum. So it might be a decent opportunity to open up a put on Disney, because if all indicators are, well, not all indicators, but if some indicators are suggesting an upward trend, then in theory your puts would be secure. So those are really the three tickers I'm keeping my eye on this week: Disney, Space, Activision. I did talk in my previous videos of possibly opening up a play on Micron. We'll take a look to see what Monday looks like, to see if any of those other three tickers are looking good to trade options on. Another one of my past favorites has been IWM, which has kind of been trading in the high 140s for a few days now. So again, it looks like it's trading in a little bit of a channel as well, between, let's say, around, I don't know, about 150-ish, and then maybe somewhere around here in the mid 130s. So I don't know. Again, these are just some very crude support and resistance levels I drew very quickly, but I have to keep an eye on IWM, see what it's going to do. But I also don't like it where it is. I think it's a little bit too high of a price right now, but who knows? Right now the market has just been going up week by week, so who knows where the top is right now. But that's my thoughts for this week. Obviously, none of this is financial advice, all just for entertainment purposes only. Just what's going through my head right now about what tickers I may want to play. If you haven't already, make sure you jump in the Discord server while it's still free. And as always, if you have any questions or comments, leave them below, and happy trading.